I'm Ira Epstein. Here we are with our financial market wrap-up, and this wrap-up is for Thursday, the 14th of July, 2022 at 5:30 p.m. Central Time. You know, I get the impression in the financial markets now that we want to get a bounce. Yep, I wouldn't be surprised if you try to give a bounce in the currency markets, a little bit of a rally coming into the metal markets, the stock market. Why? Simply because you went down the Bollinger Bands, hit so many of them are right at those zones that the markets like to turn. Now, because you have embedded readings in the Bollinger Bands, to get anything serious in a rally going, you got to lose those readings. If you don't understand what I'm saying, take your cursor, move it to the top up here, and when you get there, you're going to see an icon appear. It'll take you into our Bollinger Band area for the enhanced Bollinger Band course. Learn. This is so important in these type of markets. I'm going to review this here, but for those of you that don't understand it, it's like getting your master's degree in momentum and Bollinger Bands at the same time. In the S&P, you can't argue that we've been in a downtrend. You're down 2.5% for the week. You're not at the lowest low that you recently made. You would think so with all the bear news, but it's not. This was the lowest low, coming in on a closing price here of 36.63.76. You're well off that low. So you will always want to have an idea of where you've been in markets. When you take a look at the daily charts, I have repeatedly pointed out that we're caught in a trading top from that high to a trading bottom of these lows, just going sideways at this point in time. I don't think you can deny that one way or the other. What the market is doing is consolidating. Yeah, I know that sounds hard to believe, but it is, because you have a lower low and a higher high, and you're not going anywhere in it. You're stuck at the 18-day average zone. You get a little over it, you get a little under it. It's like a song. You're not really going anywhere, but you think you are, and what you're caught in are the Bollinger Bands. Notice how they've wrapped their arms from the top to the bottom around the market. That is where you get in the trouble. This is the pattern of trouble. And when you see these patterns, I not only look at them hard, I run from them because you don't follow through one way or the other. That is the hallmark of wrapping these Bollinger Bands around the market. And that's what you've got. Even momentum, which got overbought, and I think you can see that, has now pulled back to the point where in the momentum, when you got up into this zone, you've come down. Well, you know, you'll say, well, momentum may turn up and you get to the 18-day average or higher, so what? I don't think you have the power to go through the upper band on this. I think you're caught in no man's land temporarily. The same thing in the NASDAQ. So the hardest thing to understand is, are you in a move like this? Or are you in a move that's caught in this type of band and you go back and forth and you listen to all the noise and the commentators on TV, oh, it's bullish, it's bearish, it's this, it's that. It's nothing right now. Overall bearish, but nothing. Same thing in the Dow. You're challenging these lower bands and you're just not punching through them at this point. And I don't see a report tomorrow to come out that at least one that I know of, that's going to move the market dramatically one way or the other. So those are the things you pay attention to. The VIX. I was bothered, and I've said, you've got divergence taking place here. Here you are in another big stock market break today off the bank stocks. We saw that take place and how the market reacted, and then you're getting other numbers that are coming out. All inflation readings are terrible. And at the same time, where's the insurance people? They're not buying this VIX. What's the reason? Could they be out of the market and they don't need it? You know something? That's what I think's been going on. I think you're getting people that are trimming positions. You've scared the heck out of them, and they're just saying, you know, I'm going to go to cash for a bit. If you're in cash, you don't need the VIX, right? It's not in every market, but that's what I think's going on. In the bond, you have an uptrend, not a downtrend. Now, you would think with all that you're hearing, oh, the interest rates, the Fed's going to go 75, maybe 100 basis points, that you'd be crashing in this market. Instead, what's going on?